was done back in 2012. We haven't had one, to my knowledge, and I asked him, we haven't had a water model since then.
Because I first got elected in 2013, and when we pulled that big grant, we did a water model after that, because we were considering, and even then, I wanna say when Jackson was here, we were talking about doing a water model as well, because we were talking about doing the main water line, replacing it, because, LNB was saying that it needed to be replaced because it was still either a cast iron or it was the asbestos line. I don't remember exactly what it was.
There was we talked about, one of the main lines that we talked about was off of, help me out, Hector, where Colorado and
It runs off of Cherry.
Cherry.
Colorado and Cherry.
All the way to the Colorado plant.
Is that the main one that we were talking about several years back?
Several years back, yes, the cast iron one.
That's when the plant in Cherry went down. It went down about 3 years ago. And we went and replaced some. We replaced the well on the
What
bottom.
I understand, Hector, there's about a mile of cast iron that's never been replaced, into the line itself. And so I think that would be part of, when we get the recommendation to replace that line. I think, listening to Hector, speaking to him, that's one of the biggest issues they've had from, them always having line breaks, one. And then, but the water model, again, I can share with you the copy of the water model I have, which again, I would assume that if anybody would have done a water model, it would have been LNB.
Yeah, it should have been. Yeah, because it was, I wanna say we pulled that grant in 2015 or 2016. And,
We may not see that water module.
yeah, because they
If
were
LNB
pretty
did it.
big on that water model, and they were supposed to do that, and that's whenever we were also talking about another subdivision and stuff like that. And they were talking about we needed to pull the water model, talking about looping the whole system in case one side of town went down, we were able to loop around and connect it, make sure that we still had water on that side of town. Because I think right now it's pretty well divided, where if one side of the town doesn't, if something goes wrong on one side, it
It affects the whole town.
affects.
Yeah, it does.
Yeah, you still, one of the examples we talked to them about was, what was the name of that road again?
Trinity and Mulberry.
That break happened a week or two ago, and it affected the.
Margot.
Encino.
Yours, I think, Encino, all the way out there, and it happened clear across town. So, the
Is the
question,
system been looped?
Some of it has been looped, some of our bigger lines have been looped, not entirely. So,
you do have those issues again where, I say, you say the word unexplainable issues, but it's just something to where we really don't
Yeah.
know why that would have happened. But in saying that, what I can do is I can share and I know that Mr. Vieira, we went over not only that water model, but what was done, because I think some of the other things he mentioned is that some of the things that were identified in the reports, the council at the time didn't want to do the projects. And I don't believe they were ever done. So I can take that information.
Is there any alarms in case any of those chlorine bottles leak that the guys can know before they walk in? There's no alarm?
No, that's what she just said.
No alarm for leakage?
Nope. Nope. That's why we had
Do they wear masks when they go in there?
Jack, do you wear a mask?
to the coronation,
Yeah.
there is a mask provided.
As long as there's one provided.
Council, any other questions?
We know what chlorine can do.
Yeah, ladies, thank you very much. One of the things too, of course, being a banker, anytime they talk about principal forgiveness, I'm like, okay, we need to kind of explore that. And just the resource I think these ladies and their company, CDM Smith, bring to the table is going to possibly provide some solutions for us. Emergency preparedness, we touched on a little bit, and other things. So not an action item, but you'll be seeing that coming on the agenda near council meetings, so we can discuss. Thank you very much, ladies.
Sure, thank you.
In between here and there, council, what I'll do is I'll provide that water model to the council, so you're aware of it, or at least a report,
The most recent.
the most recent one that I have on file, that I'm aware of, and share it with the council.
Okay, all right, thank you. Discuss discussion regarding property tax reports and legislative changes to property tax code. I think you got two handouts with your packet. And you guys, Mr. Rocha needs no introduction to us, so welcome, sir.
Good evening.
And you have the floor.
Hello. Excuse me. I'm going to start on the first packet. This is the tax collection report, the annual. This covers June 2020 through June 2021. I'm going to start on page page 5, chapter 2. So let's give you an overgeneralization of how the property tax system works. So in October of last year, tax notices go out. And so last year, it went out by 2 tax offices. You have the Fayette County Appraisal District and the Fayette County Tax Office. Fayette County Tax Office sends out your tax notices, but 2 tax notices were sent out in October. Those notices are sent out. You have until the following year, which is this year, January 31st of 2021, to pay your current taxes. On February 1st to become delinquent. From February through June, they're collecting penalty and interest. If you see where it says May 2021 tax lien notice, 872 letters, those are the individuals, taxpayers that still had their 2020 taxes still due. So by tax statute, by law, we have to mail out a notice 60 days before it's turned over to us in July. So 872 letters went out. If you notice the drop, so in July 2021, we received the new amount of delinquent taxpayers. It dropped from 872 to 531. So right now, there's about 531 taxpayers that still have some delinquent taxes. They may be on a payment arrangement. They may be abandoned properties. This also includes those properties with tax deferrals. But we still send them a notice to make sure if they have a homestead over 65, we still want to get them on even though they have the exemption or disability or military exemption, we still want to give them on a tax deferral, which is a separate deferral altogether. And to give you an example is we have a tax sale that's going to be occurring in October 5th. We send out notices to the taxpayers that do not have payment arrangement and have a judgment on their property. I received a call today from a gentleman who received our notice that he needs to get on a payment arrangement or we're going to set up a tax sale. Well, talking to him, he says, I'm over 65, I filed a tax, I have an over 65 exemption homestead. So you can go online, you can check out the homesteads on your website, on the appraisal district's website. I said, sir, you have an over homestead. As of right now, there is no over 65 exemption. So I told him to go ahead and go to the to the appraisal district, get his exemption, tax deferral. Anyone hear from us ever again? And at the same time, that sending those letters out reminds them. You talk to them, say, hey, you need to get your tax deferral on there, over 65 exemption on there. So that helped out. And again, when we send out these notices, before we send out the letters, they get approved by the tax office. They go through, we get our list, we send our list over to the both tax offices, and say, okay, no one's ever paid on this one, we don't have any payment arrangements, no one's contacted us, go ahead and mail a letter so we get the ball rolling on some of these. So that's the process right now from filing. So as of right now, it's July. We mailed the July letters you see there. We're going to do September mailing, and then probably sometime between December and January for the 2020s, they have not done anything, we'll start filing lawsuits. On some of the businesses, a majority of it's some oil and gas companies, either few in the city and mostly outside, will do tax warrants and do some tax warrants to see some business personal property. The majority are oil and gas. If you look on page 11, with target mailings, these are over the years, just basic mailings for the litigation. So because of COVID, everything was slowed down. A lot of the offices were slowed down. There was no traveling. We still did mailings. We still did collection calls, did as much as we could. And if somebody indicated there were a COVID issue, we put that on hold and we continued that process. It opened up again. We started doing additional outgoing collection calls. If you look on page 12, again, we're not, if you notice there's some that said, like, if you see on page 12, December 2020, there were 17 calls on counts. Well, now that's 0 because they've paid those taxes. As right now, those are coded outbound collection calls, but now they're at 0 amount for payment. Page 13 is on my inbound correspondence, phone inquiries, and walk-ins. So from June of 2020 to as of April 2020, all those will be correspondence and phone inquiries. We didn't open up again until May of 2021 of this year. And again, now we've closed again at this time. We only opened for that 2 months, and we closed at this time for because of COVID. And we'll play day by day and see how we're going to do it on that. We still get phone calls, and we're still doing inquiries, but as far as people coming in, we waited on that. Page 14 are the payment arrangements. You notice that there's some that have 0 balances because they got on a payment agreement with the tax office or with our office, and they're now at 0 because they paid off the contract, and they no longer owe any taxes. Page 15, address and ownership research. So every time we do a mailing, we have return addresses. The tax offices are updated by the appraisal district. The appraisal district is updated if someone moves by the property owner. It's the responsibility of the property owner to go to the appraisal district if they move to file a change of address. So when we get that information as far as a bad address, we do a skip trace. So all those lists are the skip traces we find. We find a new address and we mail it on those individuals. Now they may contact us and say, hey, you found me, why can't the tax office find me? Well, we explain to them, it's your responsibility as a taxpayer to go to the appraisal district to update your address if you've moved, okay? Now, we can't send the information to the tax office to update their information. The appraisal district can't update their information from what we receive. It has to be the taxpayer who goes in, fills out the proper forms to update that address. And those are the addresses we found and updated. Page 16 is our title research. We haven't filed any lawsuits as far as during the last year. We requested title and received title back. We requested 18, we received 15 because we had others out there pending. But the next page will see the lawsuits filed. Litigation, we filed 8 total for the whole year. And again, the majority of these are those that are abandoned properties, vacant properties. We haven't had any responses from any owners who are there, either address unknowns, deceased parties that we were made aware of. So last year was slow, we didn't do as many. We did have trial judgments, we did do judgments, we had Zoom court. We are now back live at court. We took 6 judgments and had 2 dismissals in our trial judgments. Reissues, you notice that it was 78. So last year, there was not a lot of service and citation. So when we filed a lawsuit, the sheriff's office serves a citation to the party in the lawsuit. Last year, it stopped. So these last 78 for the past 3 months, when we open it up again, the new sheriff's been serving the citations to the new parties. Tax sales, we had 4 set, 1 was sold, and we had 3 canceled. Again, our next tax sale will be October 5th. As of right now, we have 5 pending. Nothing's been set yet, no notice of sale. We're still waiting for additional information. If I do set it for sale, the notice of sale will be filed next Friday. So they still have 2 weeks, or this week and a half, for us to contact to get on a payment arrangement with the tax office for those individuals we send out the notice to. Page 19 are our bankruptcy filings. For the year, we're looking at 2 at $23,000. And then I put also for the month of August, there were also 2, which I'll include the city, with another a little more than $25,000. Again, we have a separate department, our bankruptcy attorneys who file their claims with the bankruptcy court. At the end of the day, those through the bankruptcy court and through the tax liens that we have, the city gets paid on those. On page 21 are the collection results for the last few years. Right now, for from October through June 2021, we're at over $145,000. At that time, I do not have the July amounts yet from the tax office. You might have received it already. I haven't received the July amount, so I couldn't add that on there. But we're at right now. And then if you look on page 22, this is broken down by percentages. So I'll give you an example. This is base tax only as of June 30th, 2021. So you look at tax year 2020, and you see that first column, collected percentage at turnover. So on June 30th, 2021, 91.1% of your taxpayers have paid the taxes. Now I'm going after those, collecting on those other ones right there at that point. If you see 2019, if you look at the last 4 years, it's a decline of people paying their current taxes. So last year for 2019, it was 92.2%. If you go across that line, as of June 30th, we moved that to 95.8%. 2018, the current were at 93.2%. I put it by year, how we moved to 96%, 97.1%, to right now, the June is 96.1 in 2 years. And the same thing for 2017. The 2017 tax year at 97.8. We're not going to get 100% because you have tax deferrals, you have over 65, you have military deferrals, and those we can't file suit. We can't do anything with. Those under litigation, those under payment arrangements, we're right there. So we try to move that as much as we can up to close as we can to 100%, but we won't reach that 100%. And now, if you have any questions on that, and now I'll cover a little bit of the legislative report that occurred. It's still continuing.
Still.
Yeah, still, yes. So just a little brief what's going on. So the 87th regular legislative session has concluded. Now I guess this is the regular. The governor had until Sunday, June 20th to either sign or veto bills passed during the session. So the report you have is dated June 21st, 2021. It's our final text legislative report for the 87th regular session only. So the items you see in bold in the report all have passed. Items in red were vetoed by the governor. There was a first called session, the 87th one, ended August 6th. No bills were passed into law. Governor Abbott has called a second special session, 87-2, begins Saturday, August 7th at 2021 noon. And again, that special session will last 30 days. Give you an idea how many bills were filed. The House filed 4,671 bills. Out of those, 587 passed. The Senate filed 2,259 bills, 486 passed. So total filed bills from both the House and the Senate was 6,930. Passed total from House and Senate was 1,073. That's a 50% pass rate. The governor vetoed 20 of the bills. I'm going to hit a couple quick ones in the book. So on page 10 is House Bill 9. This is all regarding, a majority of this is regarding appraisal district changes and tax collection under the tax code. So under House Bill 988, which is on page 10, this is by Representative Hugh Shine and Senator Kelly Hannick. This is more or less related to ad valorem taxation, and all these became effective immediately on June 15, 2021. One of those I wanted to highlight from that bill is a member, adds to section 6155 of the tax code. A member of the governing body, officer, or employee of a taxing unit commits an offense, a Class A misdemeanor, if he or she directly or indirectly communicates with a chief appraiser or another employee of the appraisal district in which the tax unit participates for the purpose of influencing the value at which property in the district is appraised, unless the person owns or leases the property that is subject of the communication. This goes into effect January 1st, 2022. And a Class A is a fine no more than $4,000 and or up to 1 year in county jail. So that's one of the highlights out of that. It's a big omnibus bill. The second omnibus bill was Senate Bill 63, which is page 58 in your booklet. Senator James Nelson, Representative Morgan Meyer. Related to more of the property tax appraisal system, including entitlement of tax exemptions based on the appraisal value of certain renewable energy devices. One highlights from that bill, amends section 25.193B of the tax code, which is a property owner may elect to receive notices by email under section 1.086 for any property, not just property described in that section. So that's one of the highlights of the omnibus bill, but those bills did have a lot more dealing with the president, not really dealing anything with the effect of the city. Some other ones to highlight on page 13, it's House Bill 1090 by Bales. It amends 2521A. A tax code provides that if the chief appraiser discovers that real property was omitted from an appraisal roll in any one of the 3 preceding tax years, or that personal property was omitted from an appraisal roll in any one of the 2 preceding tax years, the chief appraiser shall appraise the property on January 1st of each year that was omitted and enter the property and is appraised value in the appraisal records. What changed there is it changed, originally it was 5 years to 3 years. Now what that is they missed the property to tax. Someone is not paying taxes on their property. They go back under this new statute back 3 years, tax year for the last 3 years. They'll send the appraisal notice. Then they'll send a tax bill to pay the base tax within the statutory time period. If you don't, then it cuts penalty and interest. So they change it from 5 to 3. So if there's any property that are not being taxed or they missed, the appraisers might have missed, you have those property owners who are cheating out the other
entities.
Tax entities and other taxpayers who are paying their taxes. Let's see here. There was page 29, amends 2535 by Sanford. Amendment section 23.014, tax codes adds chicken coops on rabbit pens used for non-commercial production of food and for personal consumption to the list of items that should be excluded from appraisal as real property. So at some point, that was being, so if you have chicken coops and rabbits, it's not gonna be appraised. One major one, on page 30, under Myers, it's new, is a new section 25.19M. So the tax code requires that a notice required by subsection A or G must include the following statement.